Hi everyone, welcome to our next session. Today we are talking about Mudarabah contract, and we have with us Tayyib, who will tell us a bit about Mudarabah. Thank you very much, Tayyib, for coming and joining us today.
Thank you very much once again for having me.
I'm doing it. Thank you very much. So Tayyib, what is Mudarabah contract?
Actually, in the last video, we have discussed that Islamic banking contracts can be safely divided into four categories. The first category is the trade-based contract. The second category is the rental-based contract. Third category is the partnership-based contracts. And the last category is agency-based contracts. So Mudaraba is a contract that falls under the partnership-based category. If we simply need to define the Mudaraba is a profit and loss sharing contract in which one party provides funds, which we call Rabul Mal, and the other party only provides services and labor without investing anything. So Mudaraba, in simple terms, is a contract in which one party is providing the funds for doing business and other party is only contributing its expertise and services or labor in this contract.
Okay, so if we are going to say that one party is funding a project, the other party is providing labor or skills or a skill set for the contract, so then the financing party will be Rabul Mal?
Yes, the financing party, the fund provider will be called Rabul Mal,
Okay.
and the other party will be called Mudarib.
Mudarab. Okay, so that means the bank, the Islamic bank or IFI, is the Rabul Mal then?
No, Islamic financial institution can act or take up both the roles. It depends on the contract. For
Okay.
example, if it is a Mudaraba is used in any financing product, Islamic financial institution take up the role of Rabul Mal. They are investing money in any project and they are acting as a Rabul Mal. On the other hand, if the Islamic financial institution is accepting deposits or expecting participatory funds, we called in Islamic terminology, from the customers or from the investment account holders, then in this case, Islamic bank act as a mudarib. So these are the both roles which are prevailing in the market in which Islamic banking can act depending on the contract, whether it's a providing money or it's providing services.
Okay, so if I understand correctly, then if I have spare funds and I go invest that fund with the bank, then I am the Rabul Mal and bank is Mudarib?
Yes, this is very true.
Okay,
In
but
this
then the
case,
bank,
yes.
yeah, the bank takes the same amount of money, the same money that I gave the bank, and go invest in your project. You want to start a construction of a building and the bank funds that. In that case, bank becomes Rabul Mal and your construction company becomes Mudarib?
Yes, this is a perfect example you have described for a two-way mudaraba. So
Oh,
in
two-way.
two-way mudaraba, banks first accepts the funds as Rabbul Mal and accept deposits as Mudarib and invest as a Rabbul Mal. And whatever income is generated from this transaction, it is shared between the customer and the bank depending on the profit sharing ratio. They agreed.
Okay, so in this case, the example I provided, so how can we, like, what is the mechanism of profit sharing in this case? Like,
Yes, this is
first I
very
invested
important.
money with the bank and the bank invested money in your construction project. So how does that
Yes,
work?
this is very important aspect of all partnership based contracts and need to understand how this mechanism works. In case of Mudaraba, at the time of the contract, a profit sharing, ratio will be agreed between the Rabbul Mal and the Mudarib, and whatever will be the profit, it will be distributed based on that profit sharing ratio. And please, I must emphasize that this profit sharing ratio can be the ratio of investment or it could be a different ratio as agreed between the partners. There is no such restrictions on this one. On the other hand, loss, Loss as a matter of principle will be shared based on the ratio of investment. Since in this case, only the investment is made by Rabbul Mal and he is 100% provider of the capital. So the entire loss goes to Rabbul Mal, and the loss for the Mudarib is the only loss of his, his salary or his, any other remuneration he is getting from it, from the business.
Okay. So if I understand correctly, I invested $100 with the bank under as Rabul Mal, right? And the bank became Mudarib. And the bank goes and invests money on its own in your construction company, right? And then your construction company incurs a loss. So that will impact my investment.
Yes, that in this case, the loss will belong to the customers. This is actually how Islamic banking differentiate itself from the conventional banking, where everything is based on risk and rewards of ownership. For example, this is the worst case scenario we are talking about. Let's discuss also the best case scenario. In this case, if the bank earns a lot of money from that contract, from the construction contract, in this case, the Rabbul Mal will get a big chunk of profit from the profit as well. So risk and profitability will be side by side. There will be a trade-off between risk and reward. Higher the risk, higher the reward. So
Okay.
yes, in this case, the principal is not guaranteed in Islamic banking transactions.
Okay. So in this transaction, the two-way Mudaraba, bank will get my consent or they will let me know before they go and invest in your project or no?
Well, there are two type of accounts which can be opened in Islamic banking contracts. First, we need to understand that these Islamic banks always accept a participatory deposits. So there are two kinds of relationship you can establish. The first one will be unrestricted investment accounts, which we call URIA. In unrestricted investment accounts, you cannot put any restriction. You allow the bank to invest at their discretion in any product they want, in any country they want, in any product they want, or any product they want. You cannot put any restriction. That is why it's called unrestricted investment account. And these are the on balance sheet accounts which are appearing on the face of balance sheet of any Islamic financial institution. On the other hand, there are restricted investment accounts or the managed funds in which you can dictate the bank that I want my funds to be invested in ijara contract, or in only in mudaraba contract, or only in this country, or only in these type of projects which has yield more than a certain percentage. So you can put any conditions. So these kind of, because they are restricted in their nature, they are called the restricted investment accounts, and that is why they are normally off balance sheet items.
Okay. So what are the main applications of Mudaraba contracts? Like what kind of products are based on this contract?
Yeah, Mudaraba is one of those contracts which are, in void since the age of the Prophet. So they have wild applications, but mostly the banks are using them on the deposit side and not on the investment side or the financing side. Because in Mudaraba, the risk is more and there are more capital requirements to compensate that risk. So banks are a bit reluctant to use this product in the financing side, but on deposit side, it is widely used as a as a product against conventional banking saving account. Islamic Bank have the Mudaraba saving accounts, and they have the Mudaraba term deposits for different tenors: 1 month, 3 months, 6 months, 9 months, 1 year, which may go up to 5 years. So you can say Mudaraba is widely used for deposit generation and less used in financing products.
So the main difference between A conventional bank's saving account and Mudaraba based deposits, it's risk and reward and interest and profit sharing.
No, there are a couple of other things which we need to remember in this regard. The first and foremost thing is the participatory deposits, which are based on Mudaraba contracts, which the Islamic Bank accepts from its investment account holders. The terminology we use is not the depositors. We use a terminology of investment account holders and not the deposits. We use the terminology of participatory funds. So these participatory funds are basically quasi-equity in nature. Deposits are, for the conventional banks, are their liability. In case of Islamic banks, these funds are quasi-equity. They have both the features of deposit as well as the equity, because they are they also share the risk of loss. And second important point is there is no guarantee of fixed profit. If you, as compared to conventional bank saving accounts, where you know that every month you will get this much rate of return, in Islamic banks, there is a risk of variability of return every month. And thirdly, in case of a loss, there is no guarantee of principal as well. But at this point, let me explain that. When we are talking about the loss or this, the loss is a very rare situation in the banking business, because Islamic financial institutions, like any other financial institution, are following the credit risk requirements and operational risk requirements and market risk requirements, which are quite common for both the institutions. In this case, if one project is ending up in a loss, there are many other projects that ended up in a profit. So in a nutshell basis, there is always a profit for the customers, for the investment account holders, but it may happen that some month they get more profit and in another month they get less profit. So there's a possibility of variability in profit, but chances of loss are very rare.
Well, thank you very much, Tayyab. People who want to understand a bit more about Mudaraba, there will be a training course. Please check our schedule on our website. Link is provided at the end of this video. And thank you very much, Tayyab, for your time today. Thank you. And this is our email address, everybody. Feel free to email us or check our website for upcoming courses. Thank you very much, Tayyab.